I'm very pleased today to be able to speak to Mr. Tang Ning, the founder and the chairman of CreditEase. CreditEase. In some ways, in some measurements, to be seen as one of the world's largest, if not the world's largest, P2P lending platform today. And it's a business that he started 10 years ago, and it's grown in remarkable ways, and he's experimenting with new initiatives. So we want to capture from you today, Mr. Tang Ning, what have you been learning, and what is this beast that you have created, and how do you think it will evolve and disintermediate or disrupt financial services as we know it to be today. So I'm very, very happy to be able to speak to you. In fact, I speak less with bankers today and more with people like yourself. One way to do this conversation is to take us back to the original idea that you had.
Sure, yeah, so that's 2006. Yeah, 10 years ago. The company is 10 years old. We invented a P2P marketplace lending model in China at that time.
Where did you borrow the idea from? I mean, did the platform exist already? Was there something called a cloud at that time?
It was just a homegrown innovation. Yeah, we had no idea there was P2P in the UK and in the US. We used a different Chinese term, meaning P2P, but in Chinese. Yeah, later on we ported this P2P term from outside. The opportunity at that time was that I was an angel investor helping young companies do well. Yeah, and one of the companies I had invested in was a training company helping college graduates to pick up market skills. And some students were asking us for tuition support because they couldn't afford the about 10K RMB tuition. I asked around for banks to help them because I told the banks these would be your future ideal customers, right? When they really needed your help, that's the best time.
Where was this? Which province?
That was in Beijing. In Beijing? Yeah. And unfortunately, none of the banks I talked to at that time were in a position to help. They were telling me that consumer credit risk was very high. There wasn't a mature, well-established credit system in China. Yeah, so what to do if institutions were not in a position to help?
So at that point, did you see yourself as a moneylender business, or was it at that point, when, without any reference to what it is today, did you see yourself as a moneylender?
It was actually a platform to begin with. Okay. Because on the platform, that was me and later on more and more individual lenders and individual borrowers. And if you look at the platform today, there are already institutional investors, lenders, but at the beginning, only individuals. Yeah, now we work with banks, trust companies on the platform to lend.
So when you say platform, it wasn't a cloud-based platform as we know it today. It was probably very manual at that point in time.
It was a matching platform, and we utilized the technology from day one to the extent that people were familiar with the internet.
You built the technology yourself?
Yeah, we built the technology on our own, yes.
Yeah, and do you now sell that technology to others who want to do the same?
We haven't done that. We believe the China market is very big. Yeah, we've got interest from all over the world for such technology support opportunity, but we haven't done that.
I want to come to a point where I want to ask a lot about your technology and the platform that you have, the data that you're gathering, and so on. What were the disciplines and risk management that you were learning from at that point in time? Just listening to you, I can see microfinance as a potential equal model, which already existed at that time. So where were you learning from?
Yeah, actually, as the inventor of the model, we see three major risks about it. One is the so-called like platform risk, meaning like some bad guys can use this model to take people's money away. There have been some such incidents in China, in the past year or two. That's because, at the beginning, clients' money and the platform's funds were actually together. So some bad guys could literally just take clients' funds away.
You mean you actually did the fulfillment on the platform? It wasn't offline. It was the borrower and the borrower and the lender.
It was an electronic payment system. So it's like one guy from Beijing could lend to someone from Wuhan, for example.
He transfers money into your platform, and then your platform transfers it to the borrower.
We worked at the beginning with some third-party payment players. But now we work with banks. So I was talking about the risks associated with this model.
The first risk.
Now we work with banks as a custodian, as escrow partner. So all the funds actually go through banking system.
Is that your preferred way to work today? Because banks can be slow, banks can be expensive. If there were other similar partners who can do it for you cheaper, would you prefer that? Or is there a value in terms of working with them?
Definitely, because that way we can reduce or eliminate the integrity risk. So that platform owners cannot take away clients' funds. So client funds and the platform's own funds are separate right now. And also, all the borrowers, lenders' identification can be checked by banking partner. Otherwise, there can be fake borrowers, which is also an integrity risk. So that's the first risk. The second risk is borrower repayment risk, credit risk, fraud risk. The third risk is on the lender investor side. Some problems happened earlier this year in the U.S., mainly because there was some problem on the funding side. Some hedge funds got out of this marketplace lending space, resulting in some trouble for those leading platforms. So I think the second risk, the
credit risk,
it's particularly tricky. In China, because we don't have a well-established credit system, right? And also you see today more and more transactions take place online, which suggests a higher credit risk. At the beginning, it was mainly offline.
Right. So the credit risk is done offline. So you actually call people, you manually intervene.
A good part of that, is done that way. Still, we need human being interaction, but more and more transactions take place online. 4 years ago, our subsidiary company, Yirendai, launched the industry's first mobile borrowing app to enable borrowers to borrow through mobile phone and get credit approval instantly, and also funding real time. So this is a leading innovation in the world. And that subsidiary company subsequently went public last year.
Right. I want to ask you about that because I wanted to know what's the difference between listing that publicly and then keeping the parent company private in that way. But just still building on your story, so you started with student loans.
Yes. At that time.
At which point did you get to critical mass and that you were able to have the confidence to try other lending, customer base? Now, the reason I ask that is, if you look at some of the newer players in the UK and Europe, they tend to be very, very successful in a localized environment. Automobile borrowers in Manchester, that kind of thing. But you seem to have been able to push this to become nationwide. And then you've now gone into mortgages, I think.
Also rural area and also wealth management, so on. Yes.
All of them are actually high risk. Farmers are high risk, small microcredit is high risk, car loans are high risk.
I think several thoughts. One is that we follow our customers. For example, those students, after graduating from training school, went to companies, right? Became salary workers. Then they had needs to borrow, to buy suit, to rent. Yeah, for example, so some consumption needs. And some became part-time micro-entrepreneurs, buying and selling things online. So then we identified that need. So we moved to salary worker. Yeah, and once we established a solid base in the city, yeah, we moved to a rural area. But we've been very strategic, very prudent when we do that, because when we first moved to a rural area, we had a partnership model. It's actually a philanthropic platform helping very poor rural female borrowers to get help from urban philanthropic lenders.
Right.
So we worked with local micro lenders
who already had data and they had already had information and so on. So this follow the customer model. You now say that you have about 2 million customers.
Yeah, we've served over 2 million.
And you track them, you trace them.
Absolutely.
You keep in touch with them over the years, and you go back to them to give them ideas on borrowing. But China is 1.5 billion people.
Yes.
Why was there no temptation to scale even bigger than the 2 million?
Actually, we've been growing quite fast. Yeah, and also it takes time to fine-tune the risk management system. Yeah, to better understand our consumers. We believe the future market opportunity is huge. Yeah, we've built a solid foundation.
Your original investors put in about $20 million. Have they been adding to that? What is your total investment in the business itself?
I think it's about that, yes.
You were able to grow on retainer?
No, actually, the company didn't need that money. All the institutional investors are world-leading VC, PE firms, right, like IDG, like Kleiner Perkins China Fund, like Morgan Stanley Private Equity. They are all my friends. Yeah, because I did angel investment work before CreditEase, and many of the companies I had supported before later on raised the money from this leading VC PE. So when they first learned about my venture, they wanted to join. Yeah, although frankly speaking, I don't think they had a very concrete idea what this P2P would later on become.
But when you look at the assets under management, I mean, lending volume, $842 million. That's a large amount for a $20 million initial investment.
We've been around for 10 years.
On the numbers alone tell me that you've been cautious in growing. Although it is large numbers, you haven't exploded yet. You're still growing organically.
Yeah, my sense is this business, we need to do a very prudent management. If we want to grow the volume, we can lend to many, many more people. But for a new product to prove itself, it takes like 6 to 12 months. Yeah, so we need to be very prudent. And when big volume comes, there's kind of a red flag. There might be some fraud situation. So we need to be very careful.
This difference between CreditEase and Yurentai, why the distinction?
Yurentai is a subsidiary company of CreditEase. We started that innovation, that subsidiary, 5 years ago to do online lending. In the first few years of the past decade, much of the work in the industry, most of it was done offline. Yeah, just like this, face-to-face, information collection, verification, so on. But we had an idea if it could be done online, consumer experience would be much better. Right. Yeah, it would be much better for SMEs and salary workers to be able to borrow real time online.
Were you looking over your shoulders? By that time, you had some of the Western players already gone online, and online had become real.
Actually, China is leading in mobile internet.
Mobile, yes, definitely. But the original online.
Most of our borrowers right now on Yurentai platform do mobile. PC percentage has gone down tremendously. Right. So it's all mobile.
Is there a difference in culture, in borrowing culture, when it was physical and then it was online and then mobile? are there things that work on mobile better than online and physical?
I'd say several consumer insights, right? Yeah, one is that, of course, online is quicker.
And mobile is even quicker.
Yeah, mobile is even quicker, right? And for some urgent needs, yeah, for some business opportunities that come and go quickly, so it's much better to do it online. Right. Secondly, online is of higher risk. Yeah, so fraud. Much easier, to happen online. Right. So our anti-fraud technology needs to be better, for online.
So when you say anti-fraud, is that detecting fraudulent calls coming in?
Exactly,
is that like something that you developed?
Yeah, exactly, like false identification, so on.
Phone numbers.
Yes, so we work with partners. Yeah, we also build the so-called knowledge graph. For example, like in the manual days, right? Like if one guy is identified as fraud, right? Like we try to trace the parties he has dealt with, right? But if you do 1 degree, that's very easy, right? If you do 2 degrees, it can be very complicated. Right. Yeah, 3 degrees is impossible, right? Analytics, we can do multi-dimensional tracing, tracking.
Having said that, you do have hundreds of outlets across the country.
Yes.
To originate the borrowers and also the lenders?
Not now. Lenders are all online.
The institutional side is so strong.
And also individual lenders come to us online.
Okay, so the lender part is a lot more sophisticated. But the borrower part, do you sense that there's competition evolving?
I'm not going to say one side is more sophisticated. I think it's about like, there will be forever a good part of the lending work to be done offline. Yeah, one, certain segments, we just don't have all the data. Yeah, so we have to do face-to-face verification, so on. And secondly, many types of transactions involve like title management. For example, like a car loan, mortgage loan, so on. Cannot do that online.
Not in China at least. Now, how does that affect the cost-to-income ratio of your business? So much of the due diligence and the credit checking is offline. What is the cost-to-income ratio of the online business right now?
I think in terms of online acquisition, and offline acquisition cost comparison, it's about the same right now. Yeah, because a couple of reasons. One is that the online data quality still not very good. Okay. Yeah, it's not like in the U.S. Bureaus produce like a very orderly, easy to use data.
Is that a barrier for entry for your competitors as well? Because as you perfect the art of credit risk management and the fact that there's not enough technology and not enough data, does that make it a difficult barrier to entry for competitors?
I definitely believe so. Because we are built upon past 10 years of accumulation of highly valuable data. Yeah, this kind of transaction data, default data, fraud data is way more valuable than the so-called big data.
Today, the city commercial banks in China especially, if not the big 4 banks, have been going after the same customers as you have. They've been building their retail customer base, they've been building their student loan, they've been building their small business lending, and so on. So is there competition, or is the market is still in its growth phase? And also, what is it that you do cheaper that I'm sure that the banks have their credit process and it is manual, and why is it cheaper when you do it rather than when the banks do it?
It's actually quite different
approach
in China than in the US. In the US, the credit system is rather established. In China, it's not.
Yes, even for the banks.
There's like a huge population not well covered traditionally by banks. In the US, such innovations make the industry better, marginally better. But here in China, there's kind of like a huge vacuum for us to fill. So we build up new industries. Yeah, For example, like we don't find a bank covering such segments. Yeah, so certain risk segments they do not cover. So there's a clear kind of segmentation strategy.
I noticed that you have a joint venture or a relationship with FICO and the FICO score. And these are traditional, old school credit risk type of approach. They give you a score and stuff like that, which is what the US used to be, and it's been criticized dramatically. Now, what can FICO do today that should be different from the way that they used to do?
It's not a joint venture. We don't have this type of business cooperation with FICO. We were among the first in China to work with FICO many years ago to co-develop some risk management module.
Did it get anywhere?
Yeah, so but now all of the risk management work we do on our own. Also, I'm not sure, the FICO system has lost much of its value. It's actually quite helpful when it comes to consumer credit evaluation.
Do you make a big deal out of the cloud-based, they call it the big data? Do you make a big deal out of the kind of information that you get in there for credit scoring?
Yeah, our experience is that such data are quite important. Yeah, so they are helpful in terms of helping us draw a better consumer profile, and that they can be helpful for some anti-fraud, right. But they cannot work on a standalone basis.
Right, because the criticism of big data is that it's ephemeral, it moves, it keeps moving. So you can't close someone on a 7-year car loan based on what his what his Weibo account looks like.
Yes, they can be helpful for some we say light applications, like a value that 100, 200 RMB, right? But for a loan as much as say 10K US dollars, our average loan size, such data on a standalone basis are not that helpful. They have to work together with traditional data.
And you come across to me as someone who's been doing this carefully, and this following the customer bit comes across very strongly. But you did get into trouble when the regulators finally published their rules for peer-to-peer lending, and you had a few lawsuits and stuff like that. Where did you think it was coming from, and what were the holes that needed to be plugged?
Actually, as industry leaders, we benefit from this regulatory cleanup. After August, right, the industry is more clean, more healthy, we expect. Actually, many of the regulatory measures came from industry best practices. Yes. Yeah, so we were not caught in surprise when the rules came out. Actually, I mentioned this a couple of weeks ago in Peru when I joined a panel in Lima during the APEC event, talking about how government and company innovators work together to promote financial innovation. Actually, the Chinese regulators have been doing this so-called smart regulation. They listen to industry voices carefully, and they incorporate industry best practices into lawmaking, rulemaking. To give you one example, we talk about CreditEase was the first working with banking institution to do bank custodian escrow partnership. This helps reduce the integrity risk, right? And later on, that became the P2P marketplace lending regulation.
Itself. Right. Now, how would you describe your current partnership with banks? China is unique in that credit is not reaching out to enough of the marketplace.
Yes, exactly.
How long do you think this phenomenon will continue, and at which point do you think the banks will start figuring it out? And also very important is this, that even as you are building this outreach or this distribution capability for credit, which is what keeps credit very expensive in China, especially to the people who need it most. The corporates that don't need it, they get lots of credit and all that. It's a moving target because the interbank market is being developed. The cost of credit is probably going to go up on a global basis, and so on. How do you think the cost and the distribution of credit business is going to evolve?
My sense is the following. One is that I think, the access to capital, the hunger, from SMEs, rural people, so on. That challenge is global. It's not that, in other countries this issue is over, and in China it's very unique challenge. No, I think this issue is always there and not fully addressed. In China, financial innovators, by utilizing innovative business model and technology, are doing a good job. So helping grassroots innovation, grassroots entrepreneurship, so on. So we have applications allowing people to borrow through mobile phone, for SMEs to borrow through PC, mobile phone, so on, utilizing alternative data sources, so on. So I think it's getting better and better. And also the credit system is getting better and better. We are hoping in coming years, not too far away, right? The central bank will start to incorporate such data accumulated by companies like us.
Right. In fact, although you're big by P2P standard, you're still very small by bank lending standard. You could be easily absorbed by one bank. In that sense that your business may well be a proof of concept rather than a model by itself. At which point do you think P2P might actually be truly an industry by itself? At the moment, it's still very parallel to banking, and there's always the risk that banks, by working with you, will just say one day that why don't we just acquire you and make you an origination point for our business?
A couple of thoughts. One is that this business model has been around for a decade. So it's a $1 trillion market right now in China. And the regulatory guidelines came out 3 months ago, making it a industry. In the US, in the UK, I think marketplace lending also sees great promise. So we are confident. So this industry will continue to do well.
What are the other connecting points in this business that you think you need to put in place to make it a full supply chain? I noticed that you're going into payments as a business, so you want to build a payment infrastructure, or you already have a payment.
A couple of thoughts about business model expansion, right? One is that we will offer more and more products and services to this underserved population. The first step is a loan business, a loan product, right? But they also need insurance. They also need wealth management, integrated payment.
By the time you reach there, the regulator has already made it very clear that they want to see Chinese walls between these different businesses.
A very clear separation, but we work with partners. For example, we work with insurance companies to distribute insurance products.
On the same platform?
No, different.
Here's where it becomes very interesting, because you become the very conglomerate that on a global basis they're trying to separate, and also to be fair to the banks, they've learned a bit about selling insurance online, for example, that actually not all insurance sells well online. Life doesn't, because the relationship part is important, and so on. You don't have to recreate some of this learning. And on top of that, this integrated relationship model, don't you think you're going to have a bit of resistance?
It's actually quite different in China's case.
The regulation clearly says you can't integrate.
We have this multi-product relationship with the small business, right? For example, small businesses don't have a good idea about insurance coverage, and but they really need insurance protection. And so we work with insurance companies to provide suitable products and services to small businesses. So that's a separate insurance agency business different from the P2P platform.
But for that, you already need to put in place salespeople. And that's something which banks are suffering from today. They've got too many salespeople. It's very manual.
Not necessarily. We can do it online. For example, the insurance or other financial services pieces are just the second step. Third step is about other enabling services. For example, we help small businesses better run their internal management, do better training, manage their finance better, manage their customer relationship better. It's a cloud infrastructure. So there are different modules on the cloud. The small business owner can take the right ones for him. So that way we help him run the business better. At the same time, accumulate very valuable business data. So this is a clear direction our business expands.
Now that you're going into mobile in a big way, what did you learn from Ant Financial or Alibaba's Yuebao, the fund management product that they had, which grew very, very quickly? But today, I think the banks also have a similar product. They're coming from the payment side, from the small business support side, from the supply chain industry, and you're coming from the credit side. So what are the opportunities for massive scaling, which are different from the different industries?
I think this question is very relevant to our second expansion strategy, which is about the lender side, the investor side. So now CreditEase Wealth Management is a national leader in wealth management. When we talk about wealth management, we talk about three main segments, right? High-end, high net worth individuals, mass affluent, middle class, and the so-called small and very small customers, investors. Yuebao is more for small, very small customers.
In fact, it's like a money market or even like a current account.
It's like a product. Yes. It's not wealth management. No. It's not asset allocation. So our strategy is that when we serve the lenders, we identified all these three segments, right? And the people had different needs. For high net worth individuals, they ask for like asset allocation, whole suite, right? Like a comprehensive help. So we now do that with a human financial advisor. And the middle piece, the mass affluent population, looking for rather simple, so a simpler version of asset allocation. So we do that with robo-advisor. But that's a portfolio, not just individual products. But for smaller investors, a very small investor community is about like a product, like a P2P product, or a insurance product, or a money market fund product. I think different segments have different needs and are served differently.
The way you're saying it to me, it seems to me that by reducing the cost of delivery, you are actually making it more available across to the different segments. Your first cost of delivery that has been taken out of the picture is the distribution cost and the reaching out to customer cost. But there's a second cost of delivery, which is advice and personalization. Mm-hmm. What do you like about robo-advisors, and what do you not like about robo-advisors?
Actually, Emmanuel, let's take one step back, talking about China's wealth management industry, right? It's very new. It's actually people have no real good idea about asset allocation. So very different from the US market, right? Here, people are focused on buying individual products, even for high-end customers, right? So the first thing we do is to teach people about asset allocation. Of course, for very small investor, it's not that helpful, right? Their fund size is too small, right? But for middle market, like middle class people, and for high-end clients, asset allocation is a must. So they are getting to understand this concept through our investor education.
But sometimes it's actually when the products are sold down the line, and when you have the small investor who's at the product level, all he wants to see is capital gains or dividends. The money should be just keep going up, basically, right? And if it doesn't, you'll get a stampede outside your door. And that's China too, because people don't understand enough yet, and it's all new, and it will go through a whole cycle of misunderstanding before it becomes accepted.
I think things are getting better. Yeah, so one is that, in the past, there's more like a fixed income product. If an investor buys fixed income product, he can get a double-digit return. But those days are long gone. Secondly, so banking takes a much bigger share in China, much bigger than capital markets.
Okay. You've been learning robo-advisors. Tell me what you've been learning about robo-advisors, and how much of it are you already experimenting?
Yeah, we started that half a year ago. Launching it at the 10th anniversary of the company. What we've learned is that one is about asset allocation, and it takes time to get that idea crossed and get people to understand. You are right in saying that people are more kind of inclined to do this fixed income kind of investment, because the visibility is on return is much clearer, right? It's like 7%, 8%. So although the underlying piece can be risky, but people tend to think it's like fixed income. So they don't yet fully understand asset allocation. So we need to do very good investor education. And also, the past several months, there have been a lot of black swans, right? Like the British exiting from Europe and the US election, so on. So people are learning, like the market fluctuations can be quite risky. Right. But our robo has done a very good job, much better than some index funds.
The robos serve you as a company or your customer?
Customer.
With robos, the customer actually imagines that he's smart, that he can make those decisions himself.
Mainly it's a portfolio based on customer risk appetite and risk preference and financial and life objectives. So it's a portfolio.
Banking traditionally is an asset-based industry where the banks carry the assets on their books and then they put capital in there. The world that you are building is an asset-free, or supposed to be an asset-free industry. Some of the regulation that's coming through in the West is putting back that asset responsibility on the platform. They expect you to carry liquidity, they expect you to carry capital, and they also expect you to carry credit risk. Although really you're a matching platform in that sense.
Yes.
Do you think the day will come when financial services is entirely a platform game?
Probably not. Different models will coexist. That's my sense. For example, like even today, asset management business is the so-called asset light, right? Or the asset manager is not responsible for the outcome of the gain or loss, right? Investors not happy, they just leave the withdraw funds, right? So it's not all like a banking model, right? But the banking model has its own intrinsic value advantages. So I think different models will coexist. I
want to end this conversation by asking you, and in fact there's so much more that we can talk about, but this multi-product approach that you're taking, the regulator has said no guarantees, no mismatch of funds, liquidity. There are very thin lines between the three responsibilities. You might be able to hold it as an institution because you have integrity, but a lot of other institutions will not be able to do that. In fact, that's the problem that Lending Club got into, and a lot of new P2P players, when they get off the ground, they have to fake the origination process. They have to pretend that there's demand, and then when the information is more and more transparent on the website, then you find the take-up. It's like the chicken and egg problem. You grow your business first, or do you get your customers first? Mm-hmm. Is it a difficult game that you play, and do you think that you will have the internal integrity to be able to make that distinction?
I think the regulatory framework has been in place to solve the issues you just identified, right? So I think we have a good regulatory framework. Yeah, central level, provincial level, industry association, working together to make financial innovation really work in China. We definitely need a more comprehensive, more inclusive financial system. So there are a lot of benefits associated with financial innovation. I do believe we have had a good start. Yeah. And there will be new pieces coming, for sure. Yeah, so there are new types of innovation, and they will go through probably the similar process like third-party payment and marketplace lending models industries have gone through, like such as financial advisor, crowdfunding, insurance tech, even blockchain, and so on. But I'm confident as a innovator, as an entrepreneur, like the benefits are way more significant than risks.
The regulator can change the game on you. The market can change the game on you. If interest rates go up, half your lenders and institutional investors, in a way, will evaporate, and then you will have to rethink and maybe rebuild the borrowing side rather than the lending side.
We can dynamically adjust the rate. Yeah, so we will see how the rate environment changes. And also we have a robust wealth management business, which is also very stable and fast growing.
The Western players in P2P whom I've spoken to are very curious about this approach of taking on wealth management in addition to P2P. Mm-hmm. But if you look at some of the changes taking place in Facebook versus WeChat and so on, China is unique where an organization like you can actually scale very quickly.
I think the biggest reason is that in the US that there are already kind of wealth management giants. Yeah, so serving a population rather knowledgeable about asset allocation in China is vacuum, is new. And we have the team, we have the capability, and we have the captive customer base. So it's quite strategically intuitive for us to do that.
So Tang Ning, that vacuum is what describes how you're growing right now. And this is a conversation that we must have several times in the next few years, because what you're learning is very important, not just for China, but a lot of the developing world as well as the developed world, where this dynamics between the platforms that are evolving as well as the customer base and what you understand about the customer is an ongoing amazing story.
Sure, love to.
Thank you very much for spending time with me today.
Thank you.
Excellent.